All right, listen up because gold just took a hit and it's not for the reasons you might think. We're going to break down exactly what's pushing gold prices around right now. And by the end of this video, I'm going to reveal a massive chart secret that could tell us if gold is about to explode higher or tank like a rock. You gotta stick around for that. Gold gets kicked in the teeth. Here's what went down. So here's the deal. Gold prices dipped today. Spot gold, the real stuff, was down about 0.8%, sitting around $3,310 an ounce. Gold futures, for you traders out there, also slid about 0.8% to roughly $3,320 an ounce. This isn't just a minor blip, it's a noticeable drop. The gold market started the week looking weak, with sellers jumping in around the 3350 mark. Now, why is this happening? Gold is supposed to be your safe haven, your go-to when the world feels shaky. But right now, the market is playing a different tune. Even with all the global chaos, gold's shiny appeal is dimming. But don't get it twisted. Zoom out a bit, and gold has actually had a monster year so far. It's up over 25% for the year so far. So today's pullback? It's a gut check, not a total wipeout. The question is, what's causing the sudden jolt? The dynamic duo crushing gold, tariffs and the Federal Reserve. There are two massive forces right now slamming gold prices: Uncle Sam's tariff threats and the Fed's money moves. First, let's talk about tariffs. You remember that big deadline, July 9th? Well, that day came and went. But here's the twist. Trump's top money guys, the Treasury and Commerce secretaries, have been signaling that the real deadline when higher tariffs actually kick in is now August 1st. That's a few extra weeks for countries to try and cut deals. Now, on one hand, this sounds like good news, right? More time for talks, maybe less trade war drama, and that's exactly why gold is falling. When the urgency to hedge against trade chaos goes down, so does gold's appeal. Fewer fears about trade disruptions means less demand for gold as a safety net. The U.S. is even close to sealing some agreements already, which takes more wind out of gold sales. But here's the kicker. Trump is still playing hardball. He said he's sending out formal notices to a bunch of countries, warning that if they don't get a deal done by August 1st, those tariffs from way back on April 2nd are coming back. And get this, he's even threatening an extra 10% tariff on countries that are cozying up with the BRICS nations, Brazil, Russia, India, China, South Africa, if they try to mess with the US dollar. So while there's a short reprieve, the threat is still very real, and that keeps a weird kind of uncertainty hanging over everything. Next up, the Federal Reserve. You know, the folks who control interest rates. Everyone was hoping they'd cut rates soon, making gold, which doesn't pay you interest, look more attractive. But then came the jobs report, and it was a total jaw-dropper. The U.S. economy added way more jobs than anyone expected last month, and unemployment actually dropped. That's awesome for the economy. But it's terrible news for gold. Why? Because a super strong job market means the Fed has less reason to cut interest rates. The market was basically pricing in a rate cut right now, but that dream has gone up in smoke. Traders are now saying there's almost no chance of a July rate cut and maybe only two small rate cuts by the end of the year. Think about it. If you can get a decent return on your money by simply putting it in a bank account or a bond because interest rates are high, why would you buy gold that just sits there doing nothing? That's the core reason why a stronger economy and higher interest rate expectations are a big problem for gold. What's next for gold? Levels to watch and the big secret. All right, so with all this happening, what are the price levels you absolutely need to watch? We're talking about where gold could find support or hit a wall. Right now, gold is trading around $3,310 an ounce. There's an immediate sell zone just above that, between about $3,300 and $3,310. Sellers are waiting there. If gold can somehow break higher, look for a resistance level around $3,360. If it punches through that, it could signal a shift. The major resistance level that's been tough to crack is around $3,500. That's the big one. On the flip side, if gold keeps falling, look for minor support at about $3,290. Below that, there's a strong support zone around $3,270 and then a major support base at $3,250. If gold breaks below $3,290, it could quickly drop to $3,270 or even $3,215. Now, for that chart secret I promised. Take a look at the 4-hour chart. Imagine it on screen. It's beautiful. Gold has been trading inside something called an ascending triangle pattern. This is a big deal. This pattern basically shows gold hitting a flat ceiling, but its lows keep getting higher. It's like a coiled spring building up energy. Usually, this pattern is a bullish signal, meaning it's preparing for a big move up. Gold has been respecting an upward trend line since March, constantly finding support there. As long as it stays above this ascending trend line, the bullish outlook is still alive. If gold breaks above its $3,500 resistance with heavy trading, it could trigger a huge rally. But here's the catch, the flip side of the secret. If gold breaks below that ascending trend line, that rising floor, it basically invalidates the whole bullish setup. That would be a bad sign, potentially sending prices down to 32.50 or even 32.15. Other technical stuff is also flashing warning signs. The RSI, a momentum gauge, is below 50, showing weakness. Bulls need to push it past 55. Bollinger Bands, which show price volatility, are looking flat and leaning bearish. The moving averages, think of them as short-term price trends, are getting closer, and if gold drops below both of them, it's another signal for sellers to jump in. The MACD, another momentum indicator, is losing its bullish grip and could soon cross into negative territory, confirming more downside risk. The wild cards and your game plan. Beyond the charts, you've got some wild cards influencing gold. The US dollar is the big daddy here. When the dollar gets stronger, gold usually gets weaker because it becomes more expensive for folks holding other currencies. With that strong jobs report, the dollar got a gust, and that's hammering gold. Even local gold prices in places like India are feeling the squeeze from the strong dollar. So these tensions are providing some cushion, preventing a total collapse, but right now the trade deal talk is winning out. Oh, and don't forget President Trump's new massive tax and spending bill. Nonpartisan analysts are saying it's going to add trillions to America's national debt. Over the long haul, more debt could weaken the dollar, and a weaker dollar is usually good for gold, but that's a long-term play, not what's moving prices right now. So, what's the bottom line? Right now, experts are saying it's a sell on rise strategy. In plain English, if gold pops up a little, that's your signal to sell, expecting it to fall back down. The overall outlook for gold right now is sideways to lower. The market is in a wait and see game. Everyone's glued to the next updates on those tariff negotiations, and especially the full details from the Fed's recent meeting minutes. Those could be the next catalyst that send gold swinging. That ascending triangle pattern, it's the key. If gold holds that upward trend line, we could see a powerful breakout. But if it breaks down, hold onto your hats because it could be a bumpy ride lower. There you have it. Gold's getting hit by tariff uncertainty and a strong dollar, but keep an eye on those chart patterns and Fed signals. If you found this breakdown helpful, smash that like button. Don't forget to subscribe to the channel for more market updates you can actually understand, and hit that bell icon so you never miss out when I drop a new video. See you next time.